Blocker from bngloans.com, and today I put together a quick training about short-term business loans in which we will discuss the current market for short-term business loans. We're going to talk about some of the things to look out for, and we're going to discuss the ideal scenario for funding your business and how to actually get there. So first things first, we'll talk about the current short-term business loans market. These loans are designed to be paid off generally in a year or less, and they can save a lot of money, a significant amount of money, vice a long-term business loan with the exact same interest rate. Now, they're going to be a great option for investment in business assets that will quickly realize a profit return, such as a piece of equipment that increases your efficiency and your productivity, and ideally it'll increase business profits that are enough to cover the cost of the loan itself. That's the ideal scenario. The loans are commonly used for cash flow shortages in a business, from things like invoices or accounts receivable, any sort of emergency equipment repair, or temporary increases that you need in production for like the holidays or seasonal products or services, just to name a few. Now, from a benefit standpoint, generally these loans are going to come with a lower interest rate than long-term loans if you steer clear of predatory lending. And there aren't as many fees as long as the loan does not default, and then you can also get fast funding if you meet the qualifications. Now, a quick caution about these types of loans in this particular space: if you research short-term business loans, you're probably going to wind up finding a lot of merchant cash advance or business cash advance type companies that are pretty excessive on the advertising, and we recommend you stay far away from these alternative lending companies that advertise excessively with terms such as merchant cash advances or business cash advances, due to the very high interest rates and fees that are generally associated with them. Now, if you choose to go down that path, be sure to specifically request full disclosure and insist on transparency of all the fees, interest rates, and potential penalties. That's a big one, the potential penalties. Like if you don't pay on the exact day, then your interest rate could shoot up to like 600%. And that's what often there are unethical terms somewhere within these areas that you may not see if you don't ask for them specifically. So just pay very close attention to that word of caution. Now, considerations on short-term business loans. If you're basing the loan on potential revenue that's not yet collected, you may run into cash flow problems and possibly default on the loan, which is precisely why you need to be careful of the fees charged by these alternative lending companies for like fast funding short-term business loans or merchant cash advances. In short, you need to take variables into account, and you need to know that you can cover the payments on the loan even if potential profits aren't realized within your expected time frame. Benefits in terms of interest savings and short duration of the financial commitment are great, but it can ultimately result in the loan default and an interruption of your cash flow that your business needs for day-to-day operations later on down the line. So a long-term loan may be a better option if your time to profit is too tight of a window. All right, so next we wanted to discuss the ideal scenario. We receive a lot of questions about whether a specific loan or line of credit is the right financing decision for a business, and whether there would be other alternatives that would have better terms. Now, the answer to that question is difficult to predict given the variables on both the businesses and the lender's side. So we would like to propose a better question, which is what we feel business owners should be asking. And that's, how do I find the best loans or lines of credit with the best terms for my exact financial situation? Now, I know this may seem obvious, but if you've spent any time researching up to this point, then you know how vague financing companies can be when they're trying to get you to apply for a loan. And the reason is they don't want to deter you from applying. Lenders and financial advisors have quotas to meet, and the criteria is sometimes a little bit more lenient than, say, other times of the month. So if they put hard criteria down on their application or their website, then they could lose the chance of you applying in the first place. And that leads to businesses applying to loans that they're not qualified for or wouldn't be a good option for their business, and then they're denied without much explanation as to why. So the solution to the problem is knowing your business's fundability from the start, and then understanding how it coincides with the specific lending criteria prior to applying for any loans or lines of credit. Now, this allows you to make the necessary adjustments to ensure that you're approved prior to ever applying. So we strongly recommend that you acquire your business fundability score. And you can do that by taking a short test that's available through our website at bngloans.com. And this is a no-cost test, and it's a lot like looking at the exam the day before you have to take it, so you know exactly what you need to study. Now, this isn't like a test in the true sense of the word or something that you have to study for, but we call it a test because it's a rating or a scoring of your business, if you will. And the study part comes when you're fixing any of the problems prior to needing to pass the lender's test when you actually apply for a loan or line of credit. Now, what the test does is it provides invaluable insight into your business's financial foundation. And it's going to allow you to see exactly what loans or lines of credit that you're pre-qualified for right now. And it does this all without creating an inquiry on your credit report. So if you were to go off and apply to a bunch of loans and lines of credit, that creates an inquiry on your credit report. And if you consistently do that, then it's a negative impact. So the unique advantage here is that you're going to see your business from a lender's perspective, and you're going to know if there's anything that should be corrected prior to ever applying for a loan or line of credit. Now, this creates the potential for that ideal scenario of having multiple funding options available to you where you can pick the best terms for your business's circumstance. And it's going to help you determine exactly how to achieve that scenario. But it all starts with the business fundability test, which you can access the test below the video. It's only going to take you about 10 minutes of your time, and it provides an extremely valuable resource for you getting the funding that you need. Now, we know your time is valuable, so we promise not to waste it. I want to thank you for watching this video, and I truly hope it has given you a great insight on your next steps to getting business funding. This is David Locker for B&G Loans, and we will see you on the inside.